Hi. Well, I'm back inside from being out. My GoPro shit the bed or something. I don't know what happened to the thing, but it cut me off right as I was extolling on what do you think is going to happen at that 5 minute level? What's going to happen as that price begins to chatter there? How do you determine that it is chattering at that 5 minute level? Well, the solution to that is, and I don't remember all the stuff that I went and said, but it rests at that hold on to your butts here again. It's that 5 second chart level. When that price, which again, I'm a short-term trader with the price going down, when that price starts to chatter on that 5 second chart, particularly when the 8 period moving average begins to roll over and flatten out, man, that's a sign that something's going to happen. Whatever's going on in that 5 second time frame, that's going to eventually be manifest up on the 1 minute, the 5 minute, the 15, all the way up on the 1 hour chart. And by the time it ggets up on the 1 hour chart, if that's what you're looking at the 1 hour chart, you're going to go, oh shit, I'm 30 pips out. Well, but it's too late. 30 pips is $300. 30 pips is, $300 on a full lot. I can think of a lot better things to do with $300 than piss it off because I wanted to wait because I'm trying down a 1 hour chart. I want to get the hell out of there with a $30 loss. So when you're looking at that 5 minute chart, again, prices started to go in your favor. And let's say your target again is 20 pips, and that thing is down at the it's 15 pips towards your 20 of success. And on the 5 second, you see it start to chatter around there a little bit. And the 8 period moving average starts to flatten out. Get out. Get out. So maybe you kind of slow on the trigger. You were 15 pips ahead, and you got back, and you got 10 pips. Well, that's 10 pips more than you had when you started the trade. And if the thing continues against you, let's say it goes to where you would have only had a 5 pip thing, and it flips around, it goes back past where you got out, and it starts heading back toward that 20 pip profit target that you had. We get back in. Why not? In fact, the fact that it did a reverse on a micro level, 5 second, it did a reverse, and then it came back, and it's still going down in the right way. Why wouldn't you do that? And the price has probably got enough juice to it to take it down. Maybe instead of 20 pip profit target, maybe you could change your view on that thing, and maybe it becomes a 25 or a 30 pip profit target. And again, you're getting back in where you would have had a 15, so you're going to go from 15 to 25 to 25 pips, 20 to 30 pip profit target. If you get in and it swings back around and it starts to go against you, boom, and get out. Maybe you lose 5 pips, but you gain 5 to start with, and now you're losing 5. So you're 5 up. You're 0.5%, 1,000 ahead. Man, I could trade my whole life at 0.5%. That's 2% a week that's possible, and that's just 0.5%. So who wouldn't take that bet? In backgammon, and I play a lot of backgammon, there's a mathematical rule that determines when you should accept that cube, when the guy flips the cube at you to double the stakes of the game. So in any game where a bet is involved, and that's really what you're doing, you're saying, well, I'm going to get back into this trade, and I'm going to take another look at that, and that profit potential is X amount. Why wouldn't you take that bet? Why wouldn't you take those odds? I'm getting back in. If it goes against me, I'm out at a 5 pip loss, and I made 5 pips. But if I'm right, and the thing can get me another 5 pips on top of the 10 that I already had, I got 15 pips on the trade. What if it goes to 30? Now I'm 15 pips plus the 10. I got a 25er on the day. I don't know how many times that's happened. As a scalper, you have to be flexible. You have to be willing to look at these things from a probabilistic standpoint in the short term. Don't be placing stop limit orders and entry orders and all that other crap. You don't want to be thinking about that stuff. You want to think, my profit target is here at 20 pips and the price is just at 17 pips and I'm going to hang on because it's only a couple of more pips and I'll have my 20. No, 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 no. Take that right out of your head. That profit target is 20 pips in your head. If it's got a lot of juice and it's going, let it go through the 20. Let it see if you can get 25 or 30 or 50 or whatever whatever the thing's going to give you. You have no control over how much money you're going to make or how many pips you're going to gain. The only control that you have is your risk. And that's what risk management is. Don't take a risk, assume the risk. You take a risk for blind stuff going on. You don't assume it. So anyway, take what I've talked about as far as scalping and my short-term risk management concepts and map those into the time frames that you're comfortable with, because the probabilities and the calculations are going to be the same. You just have to be willing to accept a $300 pip loss or 200 pip loss, where I'm only going to maybe take a 5 pip loss or a 20 pip loss or something like that. It's just relative. It's fractal, actually. So I hope you found this video interesting and that it's helped you evaluate your skills and stuff. You don't have to bother to subscribe to the channel and like it. I don't have anything to sell. I'm not trying to do anything. If you're interested in seeing if I can help you as a mentor, yeah, fine, get a hold of me and I can talk to you about that. But the whole point of these videos is to change the way that you think. My martial arts instructor, I've been in martial arts since 1968. My martial arts instructor taught me that the only way you can become who you want to become is to alter the way that you think, because you're a product of the way that you think, and thoughts are things. You need to change the way that you're thinking about your trading, because all the education that's out there is being done by successful traders who are protecting their capital instead of at the early growing stages when they don't have any capital, they're trying to make money. Use your education only as a guide, and then look rationally at what you're trying to accomplish. That's all I'm trying to do, is provide a rational counterpoint to possibly what you've thought in the past. Well, if you're interested in that, you want more information, you feel free to get a hold of me. In the meantime, have a great day. Have a great trading day. I'm Peter Rose, founder, Longwood Currency Trading. Thanks for watching.